All right. You see Inseego reporting some earnings. You see at obviously start of after hours there, they spiked up a little. Then they dropped down pretty hefty. This thing went down to the $4.50 range. Then it's back up now 3.5% after hours. So definitely been a little bit of a roller coaster of emotions for this. Definitely some recovery, really due to just some conference call and additional news brought out there. So it's some interesting stuff. So let's take a look at these earnings and see what this company has to offer for us. If it's maybe worth taking a little peek at and purchasing, we'll take a little look. So we see off of a numbers perspective what they did. So obviously quarter four. They posted a non-GAAP EPS of -10 cents, which missed by 2 cents, and a GAAP EPS of -16 cents, missed by 3 cents. So missed on a profitability standpoint. Obviously, the company's not profitable as is, but they definitely missed a little bit more. I think it's slightly interesting with a company like this, so focused on 5G. Typically, this is a very high margin sector. Traditional, at least it can be. So my concern is how they turn that around, and I'd like to see what the plans are necessarily for when profitability is expected, because that'd be interesting to look at. From a revenue perspective, though, you see $52.33 million of revenue, missed by, they're down 6% year over year, which, you interesting about that, but they did beat by 0.42 million. And you wonder how they're, down year over year. Well, that's part of the estimate. The main thing for this company is it's more focused about the future. It's all about what comes in the future for this company. It's not necessarily something that's going to necessarily see that revenue boost right now. But with 5G not really officially rolled out, let's say, not really being used either, well, what can I say? If it's not being there, used quite yet, that's where all your revenue hits really coming from. So they will pick up that revenue number for sure, all things considered. So guidance is going to be key for this company. I'll be interested to see what that looks like as we continue on. Obviously, this time they were originally down, wider loss. And revenues didn't decline as much as feared. A drag on what ended up a full year revenue growth of 8.4% year over year. Not bad. This guy on the right, I hate him so much. So guess what I think about him? Bye-bye. And bye-bye. Sorry. Gross profit fell to $15 million from a year ago of $19.8 million. So a little bit of decrease in profitability as we spoke about. Higher operating income swung to a loss of $8.7 million versus a prior year of $0.8 million gain. So definitely would like to know what that increased cost is about, but net loss widened to $13.1 million versus $4.2 million a year ago in terms of loss. Obviously when you increase loss by a good threefold, you want to know necessarily what's going on there. So it'll be interesting to see what we can find as far as expenses that may have led to that. Cash and cash equivalents at year end were $12.1 million. Very low amount of cash. The company notes it significantly strengthened the balance sheet in quarter one, reducing debt. I'm assuming they mean quarter four, reducing debt by $60 million through convertible note exchange and cutting annual cash interest payments by about $7.8 million. So I'll look at that debt number, see what happens. Maybe that's it. You see revenue by segments. IoT and mobile solutions down 11.5%, which is, that's 5G, that's them. But it's interesting to see that down number. And enterprise solutions, $16.9 million, up 5.5%. So interesting stuff. Interesting stuff. So we'll take a look at their press release now, see what exactly we can find more in detail, because we got to know, is this stock worth getting? Is it worth picking up now? Let's just take a look. So you see right here from Inseego, pioneering 5G and intelligent IoT device to cloud solutions. I do like the future-proofness of this stock. Definitely like to see that. But 2019 was a historic progress year for Inseego. We launched our first to market 5G products, recognized nearly $11 million of 5G revenue, and signed 5G product agreements with leading mobile network operators in North America, Europe, and Middle East, and Asia Pacific. Exceeding our target for the year, this sets the stage for growth in the second half of 2020 with our second generation portfolio of secure enterprise-grade 5G products for fixed wireless, mobile, and IoT edge applications, says Dan Mondor, the CEO. With the actions we've taken to strengthen the balance sheet, we're extremely well positioned to capitalize on the unprecedented growth opportunities that 5G presents. So good for them. I can't wait to take a look at that balance sheet, because I want to see if that's actually a substantiated claim. I want to see. For highlights here, you see 5G trials are underway with 20 leading mobile operators worldwide. They closed a $25 million private placement transaction with Mubadala, providing capital to support global 5G strategy. So again, here's the goal for them: it's going to be getting capital. They have to get capital to really stay in business when you're losing $13 million in a quarter, but only posting a revenue of $50 million, and you only have $20 million in cash. So really, they don't have enough cash for half a year. So they definitely need to find a way to get a little bit more in terms of cash. So they reduced the debt by $60 million on the balance sheet. Interesting to see what happens there. 2019 revenue for IoT and mobile, 154.2. They signed 5G agreements, as we saw that. They launched 5G MiFi mobile hotspot with Vodafone Qatar, and they launched 4G LTE Cat M1 tracker with Telstra, which is Australia. From Enterprise Solutions, the C-Track fleet unit booking grew 36% year over year. They launched new C-Track Pegasus Cloud platform and SMB-focused Clarity application in the first quarter, and the DMS subscription management solutions continue to be strategic product that grew 33% year over year. Cool for them. Very cool for them. Obviously, conference call information. We like to see that. Then I definitely want to see. I think we've got a good bit of information about them, but in the future, the company expects to incur expenses similar to the non-GAAP adjustments above here. So, interesting stuff. Obviously, they expect a little bit more expenses in the future. Definitely take a look at that. But obviously, I wanted to look at what this extra cost was here. What did it? So from 2019, you see research and development cost increased, as well as sales and marketing. You see an increase as well. So overall total operating costs increased a decent bit here by about $5 million. So that's really part of this increase in loss, but a lot of it really too, you see a decrease in profit, which definitely hurts. But decrease in profits partially due to the fact that they decreased revenue too. So definitely interesting stuff. What else do we like to see? This balance sheet. I mean, $12 million in cash on hand. Okay. It's debatable whether I like that or not. So from a total current assets perspective, they lost about $20 million off that balance sheet. But from total assets, that technically they are a little bit just below what they were as of a year ago. So I personally like to see them have a lot of current total assets personally, because it's liquid stuff. Typically they can move pretty easily and actually pay down, in case they have any expenses they need to meet. But it's debatable. From a liabilities perspective, you do see their accounts payable decreased about 13 million, which is good to see year over year. I like to see that, but accrued expenses did increase 5 million, so to each their own. But from a total current liabilities perspective, they definitely decreased by $9 million, so that's good. You see overall from total liabilities, we're sitting pretty much the exact same as what they were last year. So maybe the balance sheet isn't going to necessarily see as much of an improvement as I was hoping until, next quarter. I mean, we'll see. We'll see what's going on there. I don't necessarily know. But from a deficit perspective right now, they've got $37 million more dollars in debt than they do in terms of assets total. From a total current perspective, too, they've got more assets than they do liabilities in terms of current. But from long-term liabilities and just some long-term debt stuff, there's definitely some issues there. Convertible notes, that's going to be a big expense for them when that comes up. So really my main thing for this company is, where's the money going to come from? I think I like what the company's doing. It's very future-oriented. This is a stock that's future-oriented. They're focused on the future, and 5G is obviously the future. Where's this money going to come from? If profitability wasn't necessarily as hot this quarter, how are they going to actually make a profit and make net income to where they can afford, obviously, these senior notes coming up? How are they going to be able to afford any sort of product development? There's a lot of things to concern here that I'd like to know about, which I really haven't. And I'll definitely be peeping that conference call, no doubt. We'll take a look at when that darn conference call was. 5 p.m. Eastern. So that would be where this recovery came around, from this conference call, as you can see. So I want to know what they said on this conference call that really led to this. But for now, just based off the numbers, I typically go based off the numbers. But because the conference call can be misleading, they can say a lot of things that are, a little bit fishy to themselves. So just you gotta wonder, is this the stock for you? Down 40% in the past month. Is this the stock to pick up? Where's the ceiling for this kind of stock? I don't know. If you look on a 5-year basis, it's not looking great for it. But where's the ceiling at once this thing starts kicking off? I'd like to know, but I do need to peep this conference call just to see what the bounce up's about. But I don't think I'm buying this stock yet. I could see maybe buying it around the $4 range. Right around the $4 range. If it goes down to there, maybe close to the 3, because right now I don't know if their 5G is going to necessarily impact the stock price with how bearish of a market we have. Scary to get into these stocks that aren't super profitable, because you never know if we go into recession type environments. I don't think we will, but if we did, does the company survive? That one I do not know. So, whoopsies. Anyways, I hope you enjoyed this, and we'll see what we got.